All right, so if you've been paying attention to the housing market headlines lately, you might have noticed something interesting starting to pop up again. Refinance activity is officially back on the rise. In fact, we're seeing the refi applications hit their highest level in months, and that's catching a lot of people's attentions. Now, before anyone jumps to conclusions and think we're back to 2021 levels, let's just stomp that thought out right now. It won't happen. And if it does happen, it's because we have another global crisis on our hands and nobody wants that. However, this shift does tell us a lot about where interest rates are headed, how homeowners are thinking, and what it could mean for markets like Dallas and the broader DFW area.
What's really important here is understanding why this is happening now. Refinance activity doesn't just spike randomly. It's almost always tied directly to interest rate movement and homeowner confidence. A lot of people assumed refinancing was basically dead once the rate shot up over the last couple years. But this recent jump shows homeowners are still paying very close attention. And for current homeowners in DFW especially, this shift could open up some strategic opportunities depending on when they bought and what their goals are.
So let's start with the headline itself. Refinance activity jumping to the highest pace in months. What that really means is that as rates have come down even modestly, homeowners who were sitting on the sidelines are starting to test the waters again. We're not talking about a massive flood of refis, but even small drops in rates can make big psychological differences. When people see rates move from the low sevens into the mid or high sixes, suddenly the math starts to feel possible again, especially for homeowners who bought or refinanced at the peak of the rates in 2023 or early 2024.
Exactly, and a lot of these homeowners aren't necessarily trying to chase the absolute bottom. What we're seeing instead is more practical refinancing. People looking to lower their monthly payment, switch from adjustable rate loans, or even tap into equity through cash out refis. In DFW, where home values have held up relatively well compared to a lot of the country, equity is still a big part of the conversation. So even if someone's rate isn't dropping dramatically, the overall financial picture can still really improve.
Yeah, and so now let's talk about interest rates, because this is really the engine behind all of it. Mortgage rates have been incredibly volatile over the last couple of years, bouncing around based on inflation data, Fed commentary, and broader economic uncertainty. Recently, we've seen rates pull back a bit as inflation shows signs of cooling and market starts to price in potential rate cuts later on. And even though the Fed hasn't officially made those cuts yet, anticipation alone can move mortgage rates.
And that anticipation is huge.
Yeah.
Homeowners don't wait for perfect conditions, they respond to momentum. When rates start trending downward instead of upward, people feel more confident making a move. It's the same psychology we see with buyers coming back into the market. Once people believe the worst might be behind us, activity naturally increases. And refinancing is often the first place you see that shift show up.
One thing that we want to be very clear about, though, is this does not mean we're heading back into ultra low rates anytime soon. The days of 3% mortgages are not right around the corner, or even they're likely in our lifetime, despite what some headlines might imply. But what it does mean is that rates are stabilizing, and stability is incredibly important for the housing market. Even if rates settle in the mid-6 range for a little while, that's enough restart for certain types of activity, and refinancing is included.
Right, and stability helps people plan. When rates were swinging wildly week to week, homeowners didn't know whether to act or wait.
That's right.
Now, even if rates aren't perfect, people can run the numbers with more confidence. For homeowners in Dallas and surrounding suburbs, that can mean deciding whether to refinance now, wait a bit longer, or even use refinancing as a part of a bigger plan, like remodeling, consolidating debt, or preparing to move in a few years.
Yeah, and another big factor driving refinance activity right now is actually the large group of homeowners who bought when rates were at their peak. There are a lot of people out there sitting at 7.25 or 7.5 or even higher. For those homeowners, even a 0.5% can translate into real monthly savings. And lenders know this, which is why they're seeing more outreach, more refinance offers, and more marketing itself around rate relief.
And we're already hearing from clients who are surprised at how much of a difference a small rate change can make. Even shaving $200 or $300 off a monthly payment can be meaningful, especially with inflation still impacting everyday expenses. In DFW, where property taxes and insurance can be significant, refinancing can sometimes be a way to rebalance the entire monthly housing cost, not just the mortgage payment itself.
Now let's zoom out a little bit and talk about what this means for the broader housing market. Increased refinance activity usually signals that homeowners are feeling a little bit more optimistic. When people feel trapped by their mortgage rate, they tend to freeze financially. But when refinancing becomes an option again, it actually loosens things up. That can eventually lead to more home improvements, more mobility, and even more listings down the road.
That's such an important point, especially for DFW. A lot of homeowners have been staying put because selling meant giving up a really low interest rate or taking on a much higher one. As rates ease, even slightly, some of that lock-in effect starts to fade. Refinancing can be a stepping stone. People stabilize their finances now so they can make a move later when the timing feels right.
And also, we need to talk about the cash-out refinancing because that's another piece of this story. While it's nowhere near as common as it was during the low-rate era, it is still happening, especially in markets where home values remain really strong. In parts of North Texas, homeowners have built up substantial equity over the last several years. And for some, accessing that equity responsibly really makes a lot of sense.
Yes, but this is where strategy really matters. Cash out refinancing at higher rates isn't for everyone, and it needs to be approached very carefully. But for homeowners using it to fund renovations, eliminate high interest debt, or invest back in the property, it can still be a smart move. We always encourage people to look at the full financial picture, not just the headline rate. One thing people misunderstand about a cash out refi is that it's not free money. If you decide to cash out, you are taking a larger mortgage out on your house. Not only that, but the 30-year loan timer starts over again. So if you are 15 years into paying off your mortgage and you refinance, the clock resets to 30 years. This can still be a very smart financial move for some people, but those decisions need to be made strategically, not emotionally. Do your research before you decide. This isn't monopoly money as much as we wish it were.
So what should homeowners be doing right now if they're hearing about this spike in the refinance activity? Well, first, they should understand that their current loan rate, terms, and monthly payments. Second, they should run realistic numbers based on today's rates, not what they hope rates might be 6 months from now. And third, they really should talk to a professional who can help them evaluate whether refinancing actually aligns with their long-term goals. It is all a numbers game, so run the numbers. If you save more by refinancing, then refinance. If not, then don't. This may be a bit of an oversimplification, but you see our point here.
And that's especially true in DFW, where the real estate market is incredibly neighborhood specific. Your strategy in Frisco might look very different from someone in Oak Cliff or Arlington. Refinancing isn't a one-size-fits-all decision, and timing matters just as much as math. Sometimes the best move is acting now, sometimes it's waiting. But either way, having clarity is key.
So looking ahead, refinance activity will likely continue to rise and fall with interest rates. Trueflation indicates that inflation is currently sitting well below 2%. If inflation remains this low or goes even lower, the Fed will be forced to drop interest rates to stimulate the economy. And this will cause mortgage rates to continue trending downward, which will then cause us to see even more homeowners jump back in. If rates bounce back up, activity could cool again. But the big takeaway here is that refinancing is no longer completely off the table. And that alone is a very meaningful shift from where we were just even a few months ago.
Yeah. And for the DFW market as a whole, that's a healthy sign. It shows homeowners are engaged, paying attention, and starting to make moves again. Whether that leads to more listings, more renovations, or just better monthly cash flow, it all feeds back into a more active and balanced housing market. And that's exactly what we want to see heading into the next phase of this cycle.
So if you're a homeowner wondering whether refinancing makes sense for you, now is the time to at least explore your options. Don't rely on headlines alone. Look at your numbers, your timeline, and your goals. One online post or article, or even videos like this one, can't be the deciding factor if refinancing is right for you. Research is essential. And if you're thinking about buying, selling, or refinancing anywhere in DFW, that's exactly what we are here to help people navigate every single day.
If you found this breakdown helpful, make sure you like the video, subscribe to the channel, and drop a comment below if you want us to cover how interest rates could impact buyers and sellers next. We'll keep breaking down what's actually happening in the DFW real estate market without the hype so you can make confident decisions.